Good morning and welcome to Equity Story Trade Watch, 17th of August, which is a Thursday. All right, before we get on to the news today, company news-wise, and see what happened overnight, I've got the disclaimer in front of you so you can have a look at that. And of course, everything we talk about that, the market in general, it is just general advice. It is basically pretty much based on fundamentals and technicals only. All right, let's get on with it. It's a big show today because we've got a lot of things to go through, especially the news. So we're going to go through the companies by one, see exactly where they are at. But before we do that, like I said, I just want to quickly show you what happened last night, and it wasn't pretty, unfortunately. Again, I think we talked about yesterday that we've got an issue with China. It didn't actually add the fact that some of the US numbers last night, in other words, the economy numbers were actually quite strong. So that maybe has thought for the investors out there that there could be a bit of a interest rate rise still on the horizon. So overall, markets down again. You can see you had 68 points down, or 0.95 down yesterday for our markets. But the American markets, let's have a look what they are. Here we go. So Dow Jones was 180 points down, 0.52. Nasdaq was down 156 points, 1.15. Chinese, we knew that's going to be down there. They're struggling at the moment with this property space that's suffering with Country Garden at the moment, and of course the shadow banking as well, which we touched upon yesterday. Okay, so now moving to commodities again. Just following through the themes yesterday, I certainly would not be touching anything. Even the crude oil or oils with reversing calls now back under $80 again. The troublesome thing for me, right, in this is not just the commodities, it's actually gold. If you look at it, it's now under 1892, and I'm going to throw it onto the charts. If you are in gold at all, I think this is your last warning here. It is below trend. If it finishes like that at the end of the week, it is troublesome. It hasn't done that since going back to late 2022, right? So it's probably about 12 months. It hasn't done that. It hasn't broken that black line. I'd be really worried if I was in any gold stocks, even though, it's traditionally thinking, so gold should be doing okay in this market. But remember, we always look at the charts, and the charts usually guide us around where we should be looking at. And at the moment, it looks weak. So I'd be probably looking at moving on if I was in anything that I tend to be gold. Saying that, you always want to, of course, overlay that or underlay that with your gold story. So, for example, Evolution came out with their announcement today, and I think they missed expectations on the actual news, and down she goes, of course. So I think they're down today 4%, but for the week, let me just show it on a smaller time scale here. So you've got down to $3.40 now. So that's broken on a daily. So let's have a look at the weekly. It's still just holding. But like I said, if the gold price itself is below certain levels, support levels that market the traders out there is looking for, it could easily come back further. All right. So I'm just worried about these sort of things. So always wait till the end of the week, right? So we've still got a couple of days to go. So I wouldn't panic yet. But the announcement wasn't great, I have to say. Even though, long term, I'd still suppose Evolution is still decent. It's just missed expectations today on its report. And the gold is looking pretty weak. So anything gold related, I'd be probably looking very, very carefully what I'm going to do with it next. All right, so let's look at some of the other announcements, and we'll go through them one by one, like I said. Steadfast. The theme here is that you look at this particular space, PSI doing well, AUB doing well, SDF also should be doing well. However, you can see what's happening on the charts, and it's not looking fantastic. It's actually down. Let me see. Steadfast today is down. Let me see that. What, 4 cents? I think it is. Is that right? 587 to 579. It was up and down. So it's still okay, but you wouldn't get too excited about the chart right now overall. And let's just have a look at the numbers itself. So I'm going to go and show you some of these releases because it's actually quite interesting to have a look through these announcements. I'll do that throughout the actual reporting season. So you can see the underlying stuff. This is the reporting underlying ways that the company actually provides the news for you can be misleading in a way. Of course, the reporting is, you got to just, everything, everything that happened, you got to report. Underlying, you can be tricky and go, okay, well, this is what we are marking yourself against. And we took out some stuff that we don't maybe like, or maybe I said not like, but it's one-offs, things that maybe are not recurring, things like that, in nature, that maybe that won't repeat themselves in the future. Saying that, I've seen a lot of companies that do that every single year, right? So you've got underlying and they've got one-offs every single year, and they just keep deleting them, thinking, well, it seems like it is every year, so I might as well just include it as an underlying. Doesn't matter. Look, I'm just going through experience. I'm telling you how things sometimes are. Let's lose the underlying here, because of course it does tend to get out the stuff that maybe is discontinued and maybe it's not going to be repeated. So we're going to stick to that first and foremost, but just bearing in mind that sometimes the companies can be tricky with that. All right, so underlying numbers here, and the bottom line stuff is EPS, right? So we know that they should be coming up with some decent numbers. They have been. Remember, they had some acquisitions like everyone else in this space, but it's the underlying EPS, because if they do acquire, they're going to be probably diluting us, right, in EPS basis. So in this case, up 14.6%, which is not bad. The problem now is, if you look at the actual outlook, and this is always, we're going to start looking at this, is underlying diluted NPAT growth is going to be 10 to 15%, which suggests to you growth is going to be roughly similar to what came in this time around. So I'm hoping that over the course of the year, they're going to upgrade, right, with maybe acquisitions and so on. But I maybe I'm expecting a little bit stronger growth than that. At the end of the day, it's still decent. It's still pretty good. That sector is still going quite well. I wouldn't have any issues holding on to this as long as it holds. And let's go to the 3 year. As long as it's, well, maybe 2 year. As long as it holds that black line, right? That is the key for me. If it breaks that, and this the last time it did that was again back in 2022. If it breaks that, you're out. But it needs to hold it. So let's have a look at the other two, the PSIs. And this was a very good chart, by the way. Yeah, so this is much better. Still okay. And AUB, of course, which was swinging, and they come up with their report as well. So on the balance of things, right, which is probably the best stock for me? And I think AUB would be the number one pick here for me, I have to say. So just having a look at the numbers from all of them, while all of them release decent numbers, I think AUB is the one I'd still favor all three of them. Even the chart's probably the best of all three. All right, so let's move on to the next one, SVW. Let's have a look what they've delivered. And the numbers actually were pretty good, but let's have a look what the market's sort of looking at here, SVW. And this is 7 group holdings. Daily, let's have a look at the reaction. Not too bad. So it's okay. Now, remember the markets, again, are probably going to be under pressure today. So we always got to take it into account as a factor. But let's have a look at the actual numbers. And again, I had a look through that for you guys, but we're going to have a look at it again to see what's good, what's bad out of SVW. SVW is one of those companies that's got a number of businesses under its wings, right? Westtrack, Coates, Boral, Beach, and 7 West Media. So these two are not going great. The Beach and 7 West. These 3 are going well, right? Especially Boral actually Westtrack is going well, but Boral also is recovering very, very well. You saw probably Boral price recently where we're trading it, it's doing very, very well. So overall, I mean, I suppose on the back of that, they should be doing quite well, and they are. So you've got revenues up 20%, and you've got NPAT up 18%. So all up, I think that's a decent result. And they're trading on about 14 times from what I can gather, which is not expensive at all. So the key now for this is, while the business is quite mixed, right, as you can see, nature, what is the outlook here? So let's go down to the outlook straight away and see if it makes any sense to buy. It's probably more of a trading stock for me, to be honest, than a buy story because of that mix of businesses. It's just really difficult to grab your head around of what might be going well, what might not be going well. Like I said, the 2 business units are not going well, is media and its energy side of things. But saying that, let's have a look at the outlook. What are they saying for next year? And you got it here. So you've got group level guidance, and this is the key sentence: high single-digit EBIT growth expected in FY24. Now, again, one hopes that they can outperform that, right? High single digits is probably where the price should be at about 14, right? On this, maybe 15, 16 times on that. So in a probably perfect world, the valuations are probably about right for me. It's not cheap. It's not expensive. It's where I think if I'm looking for, if I'm looking for a story and I'm liking this story for some reason, I'd be okay going, okay, well, I might own it. But it's not for me. I think there's better stories out there. And maybe a story that's, we'll talk about it later, that looks much, much better. Anyway, it looking okay, trading only. Right now, if you're in this, so if I'm going to close this down, you're probably maybe profit taking actually on the back of that. I don't think that the results and the outlook was strong enough for me to actually get too excited. So I don't know, I may be expecting this sort of rollover coming back to that red line and bouncing off again, but it's still trending, right? So at the end of the day, if you're in this for a trade, maybe you bought it on this, that's your time to take a technically profit there and come again to it, right? Or hold it, use that 25.90 as your stop. Yeah, hopefully it goes up further for you over the next few days, weeks. Remember, the markets can be volatile in a reporting period, so you can get booted out and maybe not reflective of exactly what the share price should be doing. All right, let's go to the next one. AMC. So two reported today that are in the packaging space, right? One is Amcor, and Amcor to me is probably the one I'd be really looking at going, what am I even doing in here? If I'm actually doing anything in here, look at that share price. That is a sell and a half, if you ever seen a sell and a half, right? Below trend already through here. So if you're in this for reason in here, for some reason, you probably should have gone out right there at 17.20s, right? And now you've saved yourself about 20%, 30%, right? And it's actually going lower because the results weren't great. And when you actually counteract that, so we're not even going to talk about AMC, but when you look at ORA, it's, I suppose, smaller cousin, but so much better. It's ridiculous, the performance of ORA versus AMC. So for me, there's not even an argument. You'd be looking at ORA because the management here seems to be doing a much, much better job on a really difficult market to be extracting better results, right? That is the key here for me on ORA. So if you are trading this because you got in here, I like this result. I think even though, it's not a ball-throwing result by any stretch of the imagination because they're still growing at a single-digit numbers, they're actually improving the bottom line on, revenues that are in the single digits, which just shows they are doing an extremely good job in growing margins through cost cutting, through all the other means they can possibly have there. You got to like that. You got to really like that. However, saying that, there is a bit of resistance around 4. So there's not much upside. Maybe it's already got up to 390 this week, right? So look, if I'm holding this, I'm okay to hold. If I didn't take a profit there, try to that 390s maybe as a trade. Long term, there's a dividend there as well, about 4%. So, makes sense as a dividend play in a way with a bit of growth. But overall, decent, much better than AMC. And I'm okay with that one. So actually, let's have a look at it because, again, I just want to quickly show you the results from all of these companies that I've looked at this morning. So you can see that NPAT was up 8.5% on, I think, what was it? On a total revenue of 5%, right? You can see that they are doing a great job. And underlying EBIT was 12.3%. So dividends up 6.1%. So overall was going very, very well. It just looks through the whole thing. It looks decent. It's not, like I said, it's not something unbelievable that I got to get in, but it's still something that I'd probably consider as a trade for sure, first and foremost, but then maybe as a dividend as well, somewhere in there. So the outlook here, they're talking about is conditions remain uncertain. ORA group earnings expected to be higher. That's enough for me, right? I'm okay with that. Earnings supposed to be higher. I'm good. I'm satisfied because I'm not expecting miracles out of this company. So I'm sitting in this. I'm okay. That's why it's going higher. All right, let's go to the next one. Let's look at Telstra. Another big boy that is actually going down today. Look at that. And they've actually broken trend. Ooh, this is not brilliant, is it? It probably, if you're in this for a trade, you're out by the end of the week, but I don't think that's going to recover. I don't think that's going to recover by tomorrow. That's a pretty strong candle for a Telstra. You can see there's not many candles like this over the last 3 years. So I'd be worried if I'm in this. So possibly you'd want to jump in even today. Anyway, let's look at today's results, because that's always going to be pretty interesting to see what they come up with. So Telstra. There we go. And we've got total income up 5%. That seems decent, right? You've got reported underlying EBITDA of 8.4 and 9.6%. That looks decent as well. Profit after tax 13.1. So if you look at those numbers, plus 16% upside to its EPS, which is nice. So overall, if you read through those lines, is good. I think it's the fact that the outlook has been a bit cloudy. So that's why, for me, it's down significantly, 3.5%. For Telstra, that's pretty big, right? It doesn't do that normally. Now, let's look at the outlook. So look at the numbers are okay. So you look at that, you go, okay, there's growth there for sure in a company that really hasn't done much. So FY24, what does Ms. Brady say? Basically, including continued growth progress on 225, looking at lifting customer experience remains my top priority, right? I suppose for the investors out there, be going, show us the financial guidance. Total income, looking at 22 to 24.8 billion. Underlying EBITDA 8.2 to 8.4 billion, right? So let's have a look. What did this actually mean? 8.2 to 8.4 versus what they've come up with. And they've come up with 8.2 to 8.4, and not much growth there at all, is it? It's actually slowing down. It's going to be probably growing about 5% at tops. So, maybe expectations were a bit higher for that. Expecting a bit more growth than 2 to 5%. What they come up with the guidance. Hopefully that's conservative. That's got to grow. But initial market reaction, give us more, Telstra. Give us more. All right, I'll be out of this for sure. I think there's better stories again on this. All right, let's move on. Let's look at CAA. One of our, I suppose, dividend stocks they used to hold. Look at the chart. It's actually pretty good. And when you actually look at the actual numbers today, and I'll go through them in a second, they're actually better than probably market expected, because they flagged that things are slowing down. It's not going to be as good as last year. All those things that they're preparing the market for, numbers that are not as good as previous year. However, they've actually delivered quite a nice surprise. So if you look at the weekly, it looks pretty good, right? If you look at the daily, that looks pretty good as well. That had a bit of a jump. So for me, if it stays like they did in the week, you're possibly looking at to buy this. So this is one that's actually looking fairly good. So I'm going to mark that as one to look at on Friday. But let's look at the numbers. And this is why it gets quite interesting, right? It's probably not a company maybe that I've got a long-term view at the moment, because of fairly linked to some commodity prices, the economy here in Australia. So it can be very cyclical in a way, right? But it looks like it's very well run. It looks like it's coming up with beating expectations most of the times, which is a big tick for me for a business. So at the end of the day, you still got to understand that you don't always need super growth for a company to be liked by the markets, especially when they give good dividends, right? I think if you're looking for dividends, you want stability, and you probably want a company that can at least deliver what they say they're going to deliver, and maybe outperform on that as well. So for me, that's all I ask for from companies. So you can see the first half performance 23 exceeded expectations, and this is exactly what you want to hear, right? So you've got underlying EBIT. EBIT is down 2%. So like I said, there were expectations they're going to be down 10% plus. This is actually a pretty good result. Now, EPS down down 9% to 96 cents. That's still pretty good, right? I don't have a problem with that. Again, like I said, they did flag they're going to have a worse performance in the first half than previous corresponding period. So no problems there. They're actually keeping their CPA dividend exactly what it was previously, which is nice. So overall, I'm actually quite happy with that. And if you look at the outlook, and maybe that's what is more interesting for us, and we'll have a look at the actual dividend, because that's also quite key, right, for you to invest in this. But If you go down to the bottom, earnings above expectations and on par with record first half level. That's why this is going very, very well for them, right? This is why it's still something that you probably need to have a look at as a dividend play. But if you just keep going down to this, so this, this is all pretty good. Everything in that presentation is positive for me. I don't see a negative thing in there, especially when they spell it out for you, right? That things maybe sometimes are not going to be fantastic for us in the markets that are in, but we're doing our best. Thank you. That's all I need to hear. So let's look at this outlook, because that's, like I said, key for us on a path to better tomorrow. Yeah. We all know that. Here we go. So earnings guidance lifted to top end of guidance. That's it. Thank you. This is why it's up to $8, right? So you can see, while they've been fairly, I suppose, negative throughout the last 6 months, just talking down its earnings, talking about and its environment, they've been pleasantly surprised by the actual how things turn out in this first half, right? And they've now going, okay, well, it's not as bad as we thought. We're going to lift our guidance to the top of the guidance and maybe even exceed that again at the end of the next half, which is going to be February. So I'm liking this. I think this is going to be one that potentially we might even see going up further back to that $9, $9.50. So what are they trading at? So they're coming at 96 cents as the EPS. So let's have a look. We're going to put this on. We're going to have a quick look what is actually trading on. So we got CAA at $8, right? So let's get my calculator out so you guys can have a look exactly what I'm looking at. $8 divided by, remember, this is only half year. So let's call it $2, right? Divided by 2, that equals to 4 times P. That is cheap. That is very, very cheap. Now, let's be conservative. Let's say they're going to go on only, I don't know, less than 96 cents. They're going to go to 80 cents. So 170, let's say go 170, right? So even at 8 divided by 170, they're still trading on 4 or 5 times. That is cheap. That is something you have to be looking at. And the dividend is very, very good. I think the dividend on here is very strong. So if you look at last year's, which hasn't really changed much, 13%. Thank you. I think I'm going to add this to their dividend portfolio already. So looking great. Okay, so that's a big winner here for me, I think. All right, let's go back. And again, let's look at some of these stories. So the next one is MGH. And MGH is one of those up and down stories for me. One good announcement, one bad announcement, one good announcement, one bad announcement. It's coming back over above trend lines. However, is this good enough for me yet? And I got to say, I'm not still convinced, right? Even though the actual result wasn't too bad today. And of course, probably beat expectations in a way. I'm just still not 100% convinced that I'd be getting into it because of its checkered reporting over the last, say, 12 months, right? So they follow up with a sort of soft announcement, with a promising announcement, then a soft announcement, and a okay announcement. So it just doesn't give me confidence, right? From an investor point of view, that they are back in the good books yet. You can trade it, no problems, right? You can trade anything, doesn't matter how risky it is. But for me, I just need to see a bit more. Maybe I need to see it over 350 before the market really gets hold of this and saying, yeah, this is good. So I'm not even going to look through the numbers here for you, but it just, while the numbers were okay, they didn't give much financial guidance, to be honest. They just talked about, the various business units they've got, how they're going, and so on. I just need to see more. I'm going to move on to the next one. IPH. Let's look at the charts here. So there's going to be a number of stories. So I'm going to try to fly through them as quick as I can. So IPH, really more of a dividend stock than anything else. It is sort of in the middle of nowhere. So I'm not going to talk about too much, but it's something that maybe on a longer term basis, you could have a look at as a dividend play, because it's fairly steady, right, as you can see, and you can get those dividends out of it. But for me, better stories out there. Let's look at another story that was actually flying fairly high until recently, and that's NXT. And you can see what's happened here is bang, bang, bang. So this is why, another lesson, why you should heed the actual charts, right? Most of the time anyway. Actually, let's call it every single time, and then you can reassess. It broke trend here. I had to get out. We did. We had this in our portfolio. We had to get out. We did around the 120s, right? It had a bit of a bounce, but never done enough for me to get back into it. that was an announcement here that slightly below expectations, and the market really sold it down. They were going to be got a little bit jittery, right? They sold it down. I thought, it's still going to come up with a really, really good number on that announcement, right? But not quite what the market expected. But it was hit pretty hard. So I just had to respect the chart, get out, and move on pretty much until maybe we see some more announcements, or maybe the chart's trading again. And look at that, 3 weeks later, announcement saying it's going to affect us, right? As another factor in the whole scheme of the business that no one even thought about, or maybe there's some people did in there, but it wasn't quite clear in there. And down she goes significantly. Wow. I mean, holy moly, right? Talking about hitting the actual charts, there's your proof right there. Get out. If you still haven't got out, you should be out by now. But holy, that is not great, right? So yeah, that's killed it for sure. Let's move on to DRE just quickly on some results from its rare earths. They were actually not bad. So let's have a look. Are they doing anything? No. So they're just going to move on to the next one. SUL, another dividend player, which is paying quite good. And actually the numbers look very good for me. I'm thinking, retail, is it dead? No, it isn't. I mean, when you look at the numbers, right, for super cheap auto, they come up with some growth still, which just shows that the retail space is not dead. Does that mean we're going to have more rate rises? Maybe. But it just shows some businesses are still doing well, and super retail is run obviously very, very, very well. I mean, it's another one of those Nick Scali type situations, isn't it? Look at that chart. It is fantastic. Now, they also updated that first I think, couple of months, what's been doing. And for the retailers that we've seen the retail numbers, right, they were pretty dire, really. They still coming up and saying no growth, but we're doing better than the retail numbers suggests, which is great. So for me, if you're in this as a dividend play, no issues whatsoever. You're holding on. It is volatile. It is fluctuating, but at the end of the day, that is good. So if you bought it on this, you are laughing. There's a bit of resistance around 14. That's definite, right? So maybe, technically speaking, you're taking a profit here and reassessing by maybe the end of the week or next week. But I'll definitely be looking at a profit here. I think, technically speaking, because of that $14. But it's a good result. So, I might be looking at it next week in a different light, going, okay, it's done that. It's still holding on. I've taken my profit. Should I go again? Maybe, right? But we'll talk about it when the time comes. But I got to be impressed. I have to say, take my hat off to SUL. You've done well, buddy. So, as a dividend player, you are definitely ticking the boxes. All right, let's look at RIC. Another one that's really, we've been trading pretty well. Let's see what the market took to that. And it's actually starting to climb back above the trend. Was that announcement good enough for me as a trend? It was okay. I don't think it was ball tearing in any shape, way, or form. But, again, a company that's is doing okay overall. And they've got a strategy over the next three years old, right? So for me, you can see there's about 10% growth with EBITDA, underlying NPAT, 15% year-on-year growth. So overall, okay. So again, you're going to go, okay, you've delivered a good result for me. Show me what next year is like. And if I go to the actual outlook for you, you can see that it's actually not bad. So for me, another company that's really definitely tradable, no doubt about it. And maybe by the end of the week, we will be trading it, right? So I'm going to mark that one as a possibility that I think the market maybe just was a little bit wary of what they're going to come up with. But in a way that sort of really alleviated all most of the negatives and then the question marks that have been actually posed. So you can see the growth plan, the FY23-25 growth plan is still intact. Looks pretty good. Management is going to be, again, given a lot of kudos there. So if you just look at to FY24, it's looking okay. Let me just go down, see if I can find outlook. Here we go. So with a well and go to fund growth plan, they're talking about that. It is looking good. And from, I think, financial point of view, they are talking, really expects ongoing earnings growth for the year ahead. We're delivering further premiumization, that's a nice word, for the pet food sector and packaged ingredient sectors, volume increases in bulk stock feeds. So, that's good. I think there's a lot of resilience in the pet food industry, right? So from that side of things, I think that's a very decent business. And stock feeds as well, I think, generally speaking, while cyclical, possibly, it's still fairly resilient in a way. So decent business to follow. But we'll see how it finishes. I'm not super keen on that one as yet, as I am on probably CAA as a chart, but it is ticking a few boxes for me, RIC. And they don't give you that, that monetary financial guidance of, was it 10% growth? But at least they're saying that they're going to be earnings growth. Whether it's 1% or 20%, I don't know yet, but at least there is some positivity in there. So that's good. So that's another one that's looking really, really decent. All right, let's look at our favorite, GMG. Actually, very good results, right? 70%, very, very good. I think the EPS was up 9% overall. That's very, very good for me as well. And they give a guidance as well of about 9%. Again, remember, they're very conservative in their guidance usually, and they usually exceed that. So we've seen Goodman already over this year giving us guidance of about 9%, went out to 12%, then out to 15%, and delivered about that much, about 17%. So, they are perennial overperformers. Brilliant. I love companies like that. And again, I'm hoping they're conservative with that 9% growth in 2024. And I'm expecting maybe over 10%, 12, even 15% again. So really, it's still a hold for me. I have no qualms, no issues with this whatsoever. This stock is one of the best ones we've got on our ASX. I'm holding on. And really, for me, it's a long-term story. It's just probably it's not trading brilliantly at the moment, but at least it's holding. You're getting a little bit of dividends out of it. And maybe with time, it's one of those slow, long burn stocks, right? It's probably one of those Warren Buffett stocks, maybe, that he'll probably hold on forever and a day if he likes it. All right, let's move on. Like we've gone through ERA, we've gone through EVN. Let's look through our hot stock, NXL. I tell you what, I'm starting to like it more and more. But maybe that market reaction is not brilliant today, but there is something to like about this, that they is on the improve, right? So I wanted to see those results today. And even though the market reaction is not fantastic for the week, right? It jumped up, jumped down. I mean, this morning was up, now it's down 9%. Don't worry, it's going to be volatile, right? If you're still in this as a trade, it's going to be volatile. Always remember, it's always the back of your trade. You always should gauge yourself by the actual charts. But it's going to be volatile. But I actually like this result. I'm going to show you through this. Let's go through it because it is one of those ones we need to be looking at, especially when we're trading it. So the key things for me here, okay, is right here. And then we'll look at the actual outlook. So we've got, and it is, remember, they're coming off really troublesome period, right? CEO issues, customer issues, growth issues, a lot of issues, and then legal issues as well, right? So there's a lot of issues. But like I said, the green shoots appearing. The churn is coming down slightly. You've got an significant improvement on EBITDA, positive cash flows. Net cash is going down. So maybe that's where the market's looking at, saying maybe there's going to be capital raising coming up, possibly, right? So that's one area of concern for me. But if you look at the revenues and so on, it's looking good. They've even closed down the actual losses, right? So it went from about 20 million to about 5 million losses. So it's on the improve, that's for sure. It's not perfect. It's not going to be perfect for a long time, but it's in the right space for me. It's almost called a cybersecurity data type company, which is very, very good. I like those companies. And honestly, if you get the right management in, if you turn this business around, this should be trading much higher than it is. And again, like I spoke to you about it when we started looking at this as a trade, high risk trade. So overall, it is on the improve. There's still certainly some things in there that you might a little bit go, okay, we need a little bit more out of it. And for sure, I agree. If you can see here, the statutory revenue, right? 176 in FY21, FY22 down to 152. That's when the trouble years were. Up to 182 now, FY23. So really, they haven't improved much in 2 years, right? 6 million bucks. But like I said, this is improvement. That's the key, because I remember they were losing clients not that long ago. So from that point of view, it's okay. And if you look at the numbers here, the one that, like I said, the one that's really is improved for me is FY22 losses, minus 22 million, FY23 loss, 5.6. I mean, that's a significant improvement, right? So that at least it's right in the right direction. Look at the EBITDA as well. That's going up. Underlying EBITDA is going up. So all that. Now let's look at the outlook. And the free cash flows, look at that. That's positive, which is good. You know, the little acquisitions they've got in there, bolt-on, I'm not too worried about too. I'd be worried if they had a big acquisition, which, you know, when you're trying to fix up your own business and doing big acquisitions, it'd probably be a no-no. But right now, if I go down to its, if it's outlook, let me just have a look. Here we go. It's actually not bad. So targeting 10% ACV growth in constant currency, which is okay. I'm glad that they haven't given you, you know, they've given us a financial outlook, because that, you know, if you don't hit it, you're going to be absolutely smashed to smithereens again. So I'm okay with this. In fact, you know what, I'd probably be even looking at this as a opportunity to get some if I didn't get any at 150 or 140. So I think that's how I'd be looking at it in a way. So I'm still liking it as a play towards the $2 and take it from there, because that's okay for me. You know, that's for a beaten down company with a outlook and strategy targets for FY24. I'm fine. I'm fine. I don't see a problem with that at all. All right, let's move on to the next one. So I've got that. I won't talk about DHG. I'll just have a quick look at the charts. They come up with their results. I'll tell you what, I mean, talking about Paul Brothers to its big peers like realestate.com.au, I don't even know why it's always trading so well sometimes, right? It's such a poor cousin to REA. It's not funny. And I don't even know how it's going to even get close to REA. And you can see the numbers are just not great. So for me, pass. In fact, if I was in this as a trade, I don't even know if I would be in this as a trade, even though it's trading above. Give me REA every day of the week, even though it's trading 100 times. Well, a little bit less than that, but anyway, give me REA any day of the week. Much better company. All right, so two more. Let's go, and we'll call it a day. And NWH. I know I've been going for 40 minutes, but I need to go through this because it's been Super Thursday today. Just quickly, NWH was okay, but I think it's probably missed a little bit of expectations for me. So we won't go too much detail. If you're trending this, you're still holding on just. But again, you know, the market reaction tells you the story. Possibly the trade is done and dusted. So if you're in this for a trade, you're probably taking a profit or slight haircut, and you may be finding something else to play with, right? Let's look at the last one, Sonic. And this is a big company, so let's see where they're at the moment. And look at that. Look at that. Market's not happy with that performance. And maybe there's a little bit of suggestion there. And luckily for us, again, you know, we're talking about the funds. We're talking about you guys. We're talking about equity story. Stick to the trends. Stick to the CTM methods. We had this in the funds. We got out on this candle here. And lo and behold, bad result. Saved ourselves, again, quite a bit of money, right? So down she goes. Again, you got to sell out. It's not going to come back. It's not going to come back. Look, the result was okay. It just wasn't quite good enough. And the outlook was, you know, probably expectations were much better for it. They're talking about, I think, single digits again. So for me, okay, but yeah, not good enough. So, you know, it will maybe come back. We'll probably swing back to that, I don't know, $30 and come back. But below trend now, we're not interested. We're going to pass on that. Let's have a look if there's any last announcements before we let you go. And we'll have a quick look through what's actually going up at the moment. So we've got not much left in there, which is fine. So let's have a look at my watch list, which is again extensive, but let's have a look what's actually doing quite well for us on our story. So we talked about ORA doing okay, MGH doing okay. We talked about that. Capro, you know, that's the one, probably the one that's my favorite of today. Okay, Dropsuite's okay. Car sales back over 27, excellent. You know, this is the stories we should be looking at, of course. Let me have a look what else. Meta Group, again, doing very well. Ordinat's doing okay. That was on our Einsteins. So there's some decent stories on there, right? Again, remember, let's have a look at the market, what it's doing today. It is down another almost 1%, 67 points down. So that's not brilliant. What's on the bottom? NXT, of course. Ouch. All right. Thank you, guys. Thank you so much for joining me. I hope just take it easy. Of course, look at those charts that I've gone through today. If you've got any other stocks, technically speaking, if they're below trend, you got to get out. If your company delivered a decent result and still above trend, just use the trends as your guide where you should be, how you should be playing it. Have a great day. Remember, it's going to be volatility around for the moment with this reporting season. And I'll speak to you again tomorrow. Cheers, guys. Bye.